Welcome to today's video. Today we'll discuss and explore the concept of a sole proprietorship and why it can be a great way to actually start your business. So what exactly is a sole proprietorship? It is the simplest form of business ownership. It is a business structure where the individual operates and owns the entire business themselves. They don't set up a separate entity. They just start doing business. And this is the way most business people start when they're out looking to start a new venture. Well, let's dive into the pros and cons, though, of a sole proprietorship. First, it's very easy to set up. Basically, you go out and you start doing business in your own name. It's not expensive. There's no filing of any paperwork. There's no fees to get started. It is just a straightforward you going out and doing business in your own name. Now, you might actually set up a DBA, which would be doing business as. So if you are Bob Jones and you wanted to do business as Jones Business Ventures, you would set up a DBA with the state that you're located, and you would just file a paperwork saying that you are, Bob Jones doing business as, Jones Business Ventures. Okay. Normally that DBA has to be renewed, and it would vary based on the state, but that would be renewed perhaps every 5 years, as it is in Florida. Okay. As a sole proprietor, you will actually maintain control over the decision-making of the business, meaning you are the business, and that's a pro and it's a con, because you can make decisions, as the business owner without other red tape, meaning you don't have to get permission from other partners or, other members in the organization to do so. Okay. As a sole proprietor, basically you will be filing a Schedule C with your tax return, federal tax return, and you will actually have on the tax return, you would just report all income and all expenses and so forth. Okay. It's very flexible. It's a very flexible way of doing business, and meaning, you don't have any consents to obtain from other parties. And, if you're doing business and you're maybe investing in real estate, you don't have to necessarily, get the documents or the consents to buy or sell real estate or mortgage them and so forth. Okay. If you have a license, of course, if you're a professional, a contractor, and so forth, you'll use your own license to do business. And if you are required to have a license to do business, you would have to actually get a license in your own name. Okay. The problem with doing business for a lengthy period of time as a sole proprietor is that you have unlimited liability, meaning that there is no corporate shell around you to prevent you from being sued for any action that you take as the business owner. In addition, any personal liability that you have, maybe you get in a car accident and so forth, the business is now, the assets of the business are now subject to liens and seizure and so forth for that liability. So, you have unlimited liability for any actions you take doing business, meaning, there's no corporate shell that was going to protect you, whether it be a limited liability company or an S Corp or a C Corp or even a partnership structure. So your personal assets are at risk if the business faces any kind of financial difficulty, but also your business assets are subject to any action you take that is not business related. Okay. Another drawback would be limited resources. As a sole proprietor, um, funding for your business is based on you and your credit. And so it's not, there's no corporate credit involved. There's no external support. They look to you. And even in a regular business, in the first few years, most lenders and other financial institutions will look to you anyway as a personal guarantor if you're the only party involved in the business. But for all intents and purposes, there are limited resources available, and it's all based on you and your credit. Okay. Lack of continuity. When we talk about continuity in a business, meaning it would continue even if you were disabled or die. And so with a sole proprietorship, it's not a separate entity, unless you have somebody managing your business for you and you pay a manager to run the business. It will terminate if you pass away. And if you become disabled, there's no way for you to manage the business or manage the manager that's managing the business. So for all intents and purposes, the business will cease to exist, whether it be in the immediate future or in the short term. Okay, so because basically there is no there's no continuity plan with a sole proprietorship. Okay. In order to start a sole proprietorship, basically you will go out and start doing business. If you decide to file a DBA, you can choose a business name and file a doing business as registration with the state. If you have any licenses and so forth, they're in your name. You will have to obtain licenses to operate if you are in certain professions. So do check that out within your county and within your state. Registration of the business is not always required. However, sometimes, again, in the county that you register in, you might have, if you have a location, you will have to register for property tax purposes and for, and so forth. If you are paying employees, you will also have to, file with the state and the federal government certain documentation to pay those employees. Okay. And normally, you will have a state employment registration. You will have workers' compensation for those employees, but you will also have, a 941 that you have to file on a quarterly basis for the employees and for the employment income that you pay to your employees. Okay. You can set up separate business accounts. You will basically, have bank accounts for your business if you're doing business as. It's crucial, though, to keep your personal and business expenses separate because it makes it easier for filing taxes. And it also, having a dedicated business banking account will help you in the long run to actually move forward when you do graduate into a full-blown entity structure. Okay. Remember, as a sole proprietor, you are subject to, your liability is unlimited. There's, most businesses do start as a sole proprietorship because you just want to get started doing business. And it's not necessary at, in the beginning, maybe the first 2 or 3 months, unless it's, you have a high liability associated with your business, to start as a sole proprietor. But even for tax purposes, you can save on, self-employment tax if you actually restructure into, a different entity structure. So we'll discuss those in different videos. But for all intents and purposes, when I work with clients, we, they come in and we do a consult based on, the liability that's associated with their business, based on their, what type of business it has, what licenses it needs, and also, whether or not they're going to have, a liability across states, or if they're going to actually employ employees. We discuss up front how they should approach building their business, and then converting their business structure from a sole proprietorship into maybe an LLC or an S corporation. Okay, if you have any questions, we will answer those in the next video.